Mr. El Hamamsy, fondness of travel has increased again this year. Does that show in your hotel's occupancy rates?
Yeah, it definitely shows in our hotel occupancy rates. Since we've been exiting the COVID pandemic, our hotels across the entire group, primarily in Egypt, in El Gouna, in Salalah, in Oman, and also in other locations such as Taba in Egypt, have increased tremendously in the occupancy. And not only in the occupancy, but also the ADR, so the average revenue that we get per each visitor has also increased quite dramatically. We are now at a run rate that is actually surpassed our highest ever performance levels, even if you compare with the same number of rooms across the board. Multiple drivers for this, as you might imagine. The first one, of course, is the pent-up demand that was sitting in the pandemic. I think the second one, that something that we started working on 3 years ago, which was a full renovation of a lot of our key hotels in El Gouna. Across the entire system, we have about 7,000 rooms. We've actually renovated a reasonably large number of the hotels in Gouna, and we've added a brand new hotel there, as well as also a new hotel that's currently under finishing in Oman, in Salalah. And so when you have a new product, when you have pent-up demand, and when you actually also, which is the third thing we did, when you also refocus your channel strategy on more of the direct channels to independent travelers, you end up in a situation where we're having record revenues, record profitability, and record cash flow from our hotel operation.
You have recently refrained from giving a specific outlook for the year. What trends do you see at the moment?
Well, look, we've issued our first half results a few weeks ago, and if you look at it across our Egypt assets in local currency, of course, we're up first half of 22 to first half of 23 across the board by north of 60%. That is sales, revenues, operating margins, and net profit margin, and net profits, operating profits and net profits. So we're very optimistic there, and things are going really well. Again, some of that gets eaten up, of course, by the FX or the foreign exchange translation, but we know that this eventually will stabilize, and we're not too worried about that. But we're really keeping our profitability. So we're expecting that trend to continue. So we're very bullish on how things are going in our core market, which is Egypt. Now, in conjunction with this, in our non-Egypt markets, like in Switzerland, in Andermatt, or in Montenegro, or in Oman, the growth pace at which we've been going, particularly in Switzerland and in Montenegro, have been very, very positive. So I expect there to be continued growth in 2022 in a very healthy way. So we're very excited about 2023 so far, and even more excited about the plans coming forward.